500 and NASDAQ closing at all-time highs. The Dow up, gold up, real estate.
Hey everybody, welcome to another video in the technical analysis series. Today we're going to be going over the seasonality tool and how you can use the seasonality feature and historical seasonality on TrendSpider to get an edge in the market and help you make more educated decisions using both technical analysis and non-technical analysis, such as the seasonality tool. So first things first, let's just look at how you can pull up seasonality on TrendSpider. So all you need to do is go to the sidebar here, add or remove widgets, go to add new widget here, click seasonality, and the seasonality will pop up here on your sidebar. So the first thing is really, how do you use seasonality? Well, seasonality is very similar to using the anchored VWAP or the anchored volume by price in the sense that you really want to measure seasonality from a specific point in time. And so that point in time really depends on what time frame you're using. So the seasonality can be looked at in a month-to-month, week of the year, day of the week, or hour of the day format. So each one of these is measuring seasonality as a function of each month of the year. And you could even go into the each week of the year side of things, day of the week, and with the hour of the day, you're going to have a different anchor point or a start point than you would for a monthly chart. So depending on what type of trader you are, whether you're a scalper, day trader, position trader, all of these different types of strategies and ways of playing the market will definitely affect the way that you use seasonality. So for position traders and swing traders, you may be looking at the monthly or the week of the year seasonality. For day of the week and hour of the day, that may be more for a scalper or a day trader. And so really looking at the monthly and the week of the year and looking at these points in time which you want to really start your seasonality, the two main areas that I really like to look at seasonality from is the bottom here that we had in early 2016. And this was really after being range bound for almost 2 years here. And then finally we put in a bottom, and that was the start of the next really strong move up in the markets. Now you can also use the financial crisis low here, which is in 2009. And it really just depends on how many data points you want. So a lot of people may ask, well, why don't you start it from the COVID low? Well, there's just not enough time yet to really use the COVID low for month of the year or even week of the year. So when you're looking at seasonality since March 2020, you barely have 2 data points here to go off of, and that's just not a lot of data to make any type of educated decision. So with the January and February 2016 low, that's about 5 years of data, or 6 years, depending on what month you're currently in, looking at the markets. And then looking at the 2009 low, you're getting about 13 years of data. So for swing and position traders, using the weekly and the monthly timeframes, I would definitely look at using these 2 anchor points for your start of your seasonality. Now going into day of the week and hour of the day, you definitely don't want to go back too far because you're going to normalize the data. Meaning if you're going back day of the week seasonality since 2010, you'll see here that each one of these bars represents just the day of the week. So you can see Monday, Tuesday, Wednesday, Thursday, Friday, and you can see these percentage rates. They're almost exactly the same because we're going back so far. We have a ton of data. It kind of becomes normalized. But what you can do with the day of the week seasonality or even the hour of the day is you can look at how has the day of the week, each day of the week performed since the beginning of 2021. And that's when you'll start seeing some discrepancies, some slightly different variations in the win rates here. And essentially the win rate is just how many times a time period closed higher than the previous. So in this case, with Friday having a 58% win rate, that means that Friday closes higher than Thursday's close 58% of the time. And so with Tuesday, you can see Tuesday is the weakest day of the week as far as win rates go, with only a 47% win rate. And if you go into more individual names like Tesla or some of these very volatile names, you'll actually see some pretty interesting day of the week seasonality discrepancies, such as I mentioned in Tesla, if you go to day of the week seasonality since 2021, you'll see Monday has a 70% win rate, but Tuesday only has a 44% win rate. So you can use these in a wide range of a wide range of strategies. Some people may buy the dip on Friday if there is a dip, anticipating Monday to be very strong, or even going into hour of the day. Maybe you don't want to measure, since 2021. Maybe you want to just start it since the month of November. And you'll see here that the hour of the day has a very big discrepancy when you're looking at November. I did this on November 10th. So you can see here there's been about 10 trading days in the month so far. And you can see there are some very strong discrepancies between the different hours of the day here. So it really depends on what type of trader you are, what time frame you're looking at, and that's going to affect when you really start your seasonality from. So one thing that I want to go over in a little more detail as well is the actual graph here and these bars and what all these different variables mean. So if you want to look at, let's go back to month of the year, and let's go back, let's go for Tesla since 2010, which was the IPO. You'll be able to see these different months and their win rates. So you can see June has an 82% win rate, definitely the strongest month of the year. But you'll see here that there's these other variables here that you can click on that will also change the chart. And one of the main things that you may find interesting, especially if you're looking for very volatile months, is using the raw data and the min max. So these two data points will show you, how volatile is this month. So for May, you can see that May has a 45% win rate, shown by the 45% here. And you can see these little data points here, these raw data points that have a percentage once you put your mouse over them. These are the returns for each May since 2010. So you can see the lowest that we've had a return in May has been negative 22%, whereas at the biggest gainer in May has been 81%. So this will show you that May has a very wide range of volatility, with a negative 22% return in one May versus an 81% return in one May. So you can kind of get the idea that this is a very volatile month over the last 10 plus years. So the bigger that this blue zone is, the wider the range is of those returns for that month. So you can see here, let's look at September. You can see that this is a pretty narrow blue area. So your biggest move to the downside was negative 13. Let's just call it negative 14% for September. And then your biggest move was 14%, 14.42%. So the range between the biggest and the smallest return or the most negative return is not that large when you compare it to something like 81% in one May versus negative 22% in another May. So using these raw data points will really show you, is a specific month very volatile? And you could even do this for the hour of the day or day of the week. So if you want to do this for day of the week since the start of 2021, you'll see that Tuesday is definitely the most volatile day, with one of the Tuesdays so far in 2021 having about a 12% move to the downside and close. And then you've also had about a 20% gainer on a Tuesday as well. So you can see there's a very wide range for Tuesdays, even though it does have the smallest win rate. So just because the win rate may be the lowest doesn't mean that it may not be the most volatile. So this is a great visualization of the data and the seasonality to use. Now, one thing that's really interesting, and this is really looking especially at like election years, because election years do have some interesting data points and some discrepancies if you're not looking at just election years. So if you do want to remove any data and exclude data points, maybe you want to exclude every time there's an election year, you can easily do that here. So if you put in, if we go back to SPY and we want to exclude pretty much, all of the election years, you would just be able to go and put those in and just put a comma in, and you would be able to add all of them there. So this does allow you to exclude some of these data points that may, or excuse me, I didn't mean election years, non-election years. So if you wanted to put in every non-election year and just do seasonality for election years, you would just exclude all of those non-election years here. So You can filter out the data and really keep things a lot more constant. So you are just looking at a specific event like an election year and that type of thing. So it's something that you can really use to not only get an idea of, are we entering a historically strong time of year, or are we entering a weak time of the year? So AMD is a great example of this. So AMD was showing some interesting things in August of 2021. So if you're familiar with the raindrop, you know that you want to look for discrepancies between the color of the raindrop versus the color of the candle. So in this case, you can see August 2021, we closed green, meaning that we closed higher than the previous month and we closed higher than what we opened at for August. But notice that we had a red raindrop, and this raindrop barely had any volume profile at the top of the range, showing that there wasn't a lot of conviction by buyers. So we had this divergence. We didn't have a lot of buyers at the top of the range, and we were going into September, which is historically the weakest time of the year, with only a 31% win rate. So this really can allow you to use these technicals, which are pointing to possibly a bearish month coming up, but then cross-referencing that with the historical seasonality and saying, okay, not only are the technicals weak, but the seasonality for September is the lowest of any other month of the year since that 2009 bottom that we were talking about on SPY here. So this is pretty much why we're starting it from this point. This was your financial crisis low. So this is a great example of being able to see a bearish case for AMD going into September, and notice what happened in September. We had a move to the downside, and that could have been a buy the dip opportunity, because look what happens going into October and November. You're moving up in seasonality, and November actually has one of the highest win rates for the month. So not only can you use these weak seasonal times or strong seasonal times to maybe look at a trade forward looking, but you can also use these weak seasonality times to maybe buy during the weakness and hold into stronger times of the year or stronger times of the week, whatever type of trader you are. So this was a bearish example. I do want to go over IWM, which is more of the bullish example that has played out really well so far in November of 2021. So just looking at the technicals here, and this is going back since 2001, you can see we've got this previous resistance zone, and we finally broke out of it in January of 2021. We consolidated for about 9 to 10 months here, finally started forming a little bit of a bull flag, and this previous resistance was acting as support. So you had an SR flip, support resistance flip, which is just means that previous resistance or previous support became the opposite, so support or resistance. So if you look back since 2009, you can see that going into November and December, you have a very strong win rate, a 92% win rate for November, a 75 win rate for December. So two of the strongest months of the year are towards the end of the year. And not only that, you did have the technical setup here that really allowed you to see not only are we setting up, but we're also entering a very strong time of the year. And this can really help you make a more educated decision, maybe help you press it a little bit if you do have higher conviction with two different variables in the market pointing to the same thing. And so this is really how you can use seasonality and technicals together to get an edge in the market, especially using TrendSpider with this specific widget and tool on the platform. So hopefully this video is helpful understanding how using historical seasonality with technical tools such as simple bull flags or areas of volume shelves below or above. I'll mention this as well. We also did have a volume shelf here on IWM. So we had this long-term consolidation that we were already showing, but we also had this volume shelf as well. So not only did we have kind of that bull flag setup, we had a ton of volume supporting price at this level, and that volume shelf did become a launch pad. So a lot of different variables on the technical side that you can use on TrendSpider: anchored volume by price, anchored VWAP, the raindrops that we touched on AMD, to really look at the technicals and then add the seasonality to further see the perspective going into your next week, month, whatever the time frame you're trading. So Thank you so much for watching. Hopefully this video opens your eyes on how you can use non-technical tools with technical tools, and make sure to check out the next video coming up soon.